Okay, this is Đức Phan again, your course coordinator. This video is the part 2 of the previous video, overview recap of your chapter 4 on the planning, audit planning. So we're talking about the, okay, so, right. So this is an overview of the elements of the financial reporting process, and we have covered so far on the slide up to slide number 42. So now I'm covering slide number 43. Right, the new concept that we're looking here is the accounting materiality, right? So materiality level is a matter of the relative significance, right? There is a framework, the auditing standard, for preparation and presentation of financial statement. They define accounting materiality as information that is material. If omitting, missing it, or misstating it could influence the decision of the user, financial information user. Right, okay, so it's defined in auditing standard ACCT1056. Now, next learning objective number 7, test, audit test. So there are two types of audit tests that we will look at very detailed in our in other chapter. That is test of control and substantive test. Alright, bear with me 1 second. I see in the book which chapter that will define, will explain more about this type of audit test. So in chapter 8, we will learn more about different type of test control, how to perform it. In chapter 9, we look at substantive tests. Alright, there are two types of substantive tests. One is substantive test of transaction, and another one is substantive test of balances. Right? Right. So, in substantive test, our substantive procedure will be divided into two small sub-one. That is test of details or substantive analytical procedure. So we understand that before we perform the preliminary or analytical procedure during the internal control here. And then in here, in the field work, alright, in the execution phase, we perform another analytical procedure, but this is substantive analytical procedure. So if the analytical procedure here in this execution phase is to obtain evidence, alright, the previous preliminary analytical procedure here is only to provide a preliminary assessment to have the auditor to determine the materiality level and the risk of material misstatement. Alright, okay, now, so the test of control, we look at more details in chapter 8, but basically the auditor perform test of control to obtain evidence. Alright, so in here you will see all the tests here is to obtain sufficient and appropriate evidence. That's the purpose, that's the motivation. So the auditor perform test of control to obtain evidence about two things. The control activities of the internal control system are effective, right? So when you say about effective, you look at two aspects. Number one, the effective of the design of the controls, right? And the second, when it has been designed effectively, whether it has been implemented effectively. So we look at the operating effectiveness of these controls. Control in the form of policy or procedure, right? So, the purpose of all the tests of control will be helping the auditor to determine that control risk at a level below high. Alright, why is it below high? Below high means either it is low or medium, right? Right, so if it's low or medium, the auditor can rely on the key controls and then can reduce their substantive procedure. But if the test of control is failed, then they have to assess the control risk at high, and that means they have to perform a lot of substantive procedure to obtain the evidence. And we look at that in the next slide. right? Substantive tests or substantive procedures are performed on a specific transaction and balances to see whether the dollar amount of the unaccounted balance is materially misstated, right? These tests are to reduce the detection risk, right? Okay, now, two types of substantive procedures or substantive tests. That's the analytical procedure, right? So this analytical procedure, as I mentioned before, is to obtain the evidence. So it involves similar to the preliminary assessment, but it needs to provide more, critical, more logic evidence by comparison of the relationship between the accounting data and all the related information that the auditor have obtained, right? Test of detail is obtaining the evidence on the items included in the account balance or class of transaction. So there are three substantive tests here. Is it for transaction, substantive test for balance, or substantive test of the disclosure? Right. We look at more of these substantive tests and example of how the auditor performed the test and each of the item in Chapter 9. Now we do not need to worry. We just know that, okay, there are three types of substantive. There are three types of test of details and then two types of substantive procedure that include analytical review and the test of detail. Okay, now, next learning objective number 8 is about using the work of an expert or using the work of component auditor, right? So given that, there are different type of clients, each client is, in a different specialized industry, some client is too complex, right? The auditor sometimes is hard for them to unable to understand the business of the client effectively without the special knowledge, right? So the auditor sometimes have to utilize the expert, right? So the expert can be internal or external to the audit firm. Internal to the audit firm means that, some of the auditor is very specialized in bank, in insurance, in mining industry, for example. All right, they can, borrow these expertise. If they can't, then have to engage the external to the auditor firm. So external to the audit firm can be the expert from the client. Right? Normally, clients they have a lot of experts in the industry, but the auditor need to be very careful when they select, the external expert to them, but internal expertise from the client, because sometimes this expertise may be biased. The example of the RBI case that Group 1 has presented is one example. The CEO is very expert, but because the CEO bonus is based on the net profit grow and then the revenue grow, so actually you cannot rely on the CEO expertise. You have to engage the external expert outside of the RBI company, right? Okay, so ensuring so if the auditors engage expert, they have to ensure that work by an expert is adequate. They have to ensure that the expert is really expert in the field, either through their license, through their competencies, or through their reputation. And they have also to assess the objectivity of the expert, whether they should rely on the expert, whether the expert opinion is, we have no bias, right? And so this information will be supported to the answers of Group 1, question 4.34 on the RBL case. Right. Besides using the expert, the auditor can use the work of a component auditor, where, another auditor, a different auditor, will only perform the work on one component, one particular, right? Okay, so, as the principal auditor, right, the principal auditor still be liable for the work of the component auditor. Right, so make sure the component auditor understand and comply with the relevant ethical requirements. The component auditors have maintained the professional competencies. Alright, okay. So next one, the last learning objective, documentation of audit work. Right, or in another term is audit working papers. Right, so the products that auditor provide is their opinion, and their opinion are based on the evidence that they have collected. And doing so, they need to document, they need to organize very well on their working papers. Right, so working paper, can be divided into two sets. One is the permanent file, and one is the current working paper file. A permanent file is one file for, the whole history, started open from when, the client accepted the client, alright, and then continue updated year by year. Then the current working paper files is only store the working paper of one particular financial year, right? So, so the permanent files normally including all information about the companies, right? So, it will be referred again and again during the engagement. Right, current working paper file here, including audit strategy, audit plan, and all the testing of the current year. Right, so legal aspect. Auditing standard ASA 330 require working paper be kept for a minimum of 7 years, and during these 7 years cannot delete or discard, replace the audit document. Right, okay. Who can access to audit working papers, right? There are 3 parties can access to the audit working paper. Number 1, a controlling entities auditor. So, for example, if KPMG is auditing Henry Jack Australia, but Henry Jack Global is audited by PricewaterhouseCoopers. So, the PricewaterhouseCoopers Global may require access to the working paper of KPMG Australia, right? Okay, open the requirement from the client, right? The prospective purchaser or lender of the client can also review the audit working paper before they can, make their decision, but it must be consent or approved by the client, right? And also, if you, in the case that, you are the newly appointed auditor, you can ask the previous auditor to allow you to view their work, right? So in the RBA case, right, RBA of Rocher and Brown, so Rocher and Brown can request a previous auditor to, allow them to view the audit work that had been performed by the previous auditor. Right, so in all case, the auditor must obtain the permission from the client to do so. Right, okay, so here are an example of some audit working papers just for your knowledge. You don't need to understand it unless when you want to be the auditor, then you need to look. Alright, so in summary, this chapter have go over a lot of information, right? So we know that, the auditor need to obtain sufficient appropriate audit evidence regarding to the different financial assertion, alright? And the financial assertion that we mentioned, they include existence, occurrence, completeness, rights and application, value and allocation, accuracy, cut-off, classification, disclosure, presentation, professional judgment, professional skepticism, different audit procedure, different audit tests, alright? And then they have to document it in the audit working papers, and they have to keep it for 7 years. So that's it for chapter 4. I'll see you in another video of another chapter.